All right, folks, here we are on Trading Up. We've got Ray Vaughn in the house. We've just done a fantastic podcast, and I've got to say, this is top drawer. You've got to go and check it out. There is a link under the video here. Ray, welcome back to the show. We're going
Thank
to
you.
walk through a trade that you just took. I think it must have even been yesterday or something, and one of your students made 40 grand profit on their prop account, which they'd obviously already passed
Yeah,
during this trade. So let's share your screen and have a look what it's all about.
awesome. Let's do it. So this trade actually happened on the 13th. So this was last week. It was a crazy trade though. It was actually on the release of the CPI news. We were able to catch over, I believe it was like between 80 to 100 pips. It was a crazy spike. So depending on where they took profit, but around 80 to 100 pips on this one position. Now, basically, if we noticed, we've been in a downtrend on Euro USD for quite some time now. We definitely have a way more bearish pressure in the market than we do bullish. So coming to this area right here, what I started to notice is if we look at the market in not only structure, but in order blocks, what we start to see is that, for example, we had this bearish engulfing candle or order block. We had another bearish level of supply here. So if we highlight this, and what I like to do in this scenario, when there's a long wick to the top, is only highlight the body of the candle and draw that across, as in where majority of the supply lies in that area. What we can see is that we got a strong bearish engulfing or bearish order block rejection from that level. So going down to a lower time frame now, we can see almost a perfect tap to that level. Now, I also developed my own indicator based off of time and session. So for example, these purple areas are the New York session open. The darker blue is London session. The lighter blue is Asian session. So what we also noticed in the morning when we were trading is that London's high actually made a rejection in this area here. Looking over to our left, we also had a bearish order block area. So with my strategy, I'm just overall refining it from the higher time frame all the way back down to a lower time frame to minimize my stop loss. So the next thing for me would be to drop down to like a 30-minute and see what else I can find here. So in the live trading video that we actually recorded this whole session when we caught the trade, another thing I noticed was that we closed this 30-minute candle with a long wick to the top, which is showing exhaustion at this supply level. So that gave me another clue of why that CPI release was actually going to push price bearish. Next thing I did was drop to the 15-minute time frame. And if we look to the left now, what we can see is that this area turned into a order block that impulse price down. And if we highlight from basically the wick high all the way to here, almost 70 pip drop. Now, going back to the smart money concepts, if we look at this area here, from this wick all the way down to roughly about like this area here, this is what I like to call imbalance, which is basically when the previous wick did not tap and fill in the gap. So for example, this wick on this candle never came back up and retested this one. So there's basically an imbalance that needs to be filled in this area. And when we get a strong impulse in the market, 9 times out of 10, the market's going to try to do the same thing. So when we look to our right now, price comes back up to our bearish, bullish, bearish order block. Let me actually change the color of this one. All right. And that is directly where our 30-minute candle formed that wick right there. So now the next thing for me is to drop to a lower time frame and find the transition. Now I entered two ways on the lower time frames, a break of structure or what I call the sign of weakness. So a break of structure is when we go from, for example, a uptrend to a downtrend. But sometimes in the market, you'll see that a impulse leg is way too long to actually break structure. And that's when I use what's called short-term lows. So for an example, in this area here, I would say that the last two candlestick pullback consecutively bearish was here up to this impulse high. So for us to break structure, we would have to pass this low, which we eventually did. But for me, if we break a low here and another low here, that's two consecutive short-term lows broken at a significant level. So now all I want to see is a return to impulse, which would be a return to the order block that created the move. Okay, so basically this bullish bearish rejection at the high here with this long wick to the top is the first rejection in this impulse to take price down. So this is the level that we're actually looking for price to retest, which would be here. And then we want to wait for some kind of confirmation, whether it be exhaustion, bearish order block, etc. So what we see is that we get the rejection here. We then form a bearish order block, and that gives us our entry. Stop loss will go above the order block highs to the top of the wick, which would be a 4.6 pip in this case. And then we're simply catching that whole news release. So once again, like I said, I usually go for the 1 to 3 risk to reward. But in this case, with such an impulse, I never set like a hard take profit. I always take it manually. So we were able to capture this whole move basically. That was around a 1 to 20 risk to reward, depending on, the lot size you used and how big your personal stop was. But yeah, that's how we did it.
And what was the thinking around getting out of that trade at the bottom of that large candle? Like, do I even need to ask? 1 to 20.
Oh man. After that, like I just told everybody, like, look, don't be greedy, be grateful, take profits, take partials, and go on from there. So we could see that we kind of consolidated there for a while. So in this case, it was actually cool because you had a little bit of time to think about, do I want to stay in the trade a bit longer? Do I want to close? But a lot of times with these news releases, what you'll see is after you get that closure, price will start that retracement immediately. So we got lucky with this one.
And you mentioned in the show the wick algo that you were going to quickly walk us through. Can you show us some of that?
Sure.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description.
So what you'll start to notice is in an impulse leg, whether it's going up or down, the previous candle's wick low will be maintained until you start another retracement. So for an example, if we take this area here, what we can see is that we started to transition. We started to maintain some kind of, whether you want to call it support or demand, price started forming what I like to call a right shoulder. So this left head and right shoulder, whether you want to call it like a head and shoulder pattern or a Quasimodo, this right shoulder is indicating that a new level of demand has been formed. So let's say that we just entered where this bullish candle is here. From that point, I would be watching and maintaining my order by looking at the previous candle's wick low. So for example, once this bullish candle forms, I would not want to see price past the wick low of this candlestick. Same thing here, same thing here, same thing here, and same thing here. So if you were trying to take advantage of one simple impulse in the market, all you would have to do is trail your stop under every candle closed in a certain direction. So you can see your stop would have been hit here, and you would have caught this whole impulse leg without giving much back at all, around 1.9 pips. Now, what it also helps with is training your mind and understanding when an actual retracement is starting. Because once we broke this line, I understand, okay, get ready. Price has the chance of coming all the way back to this order block here because of the fact that there's an imbalance in the market. So it kind of trains you to understand like, okay, if I don't want to hold for a potential retrace all the way back to this level, let me close here and I'll simply wait for another entry point. Now we can also see it on this impulse here as well. So if we see, this could have been an entry based off of this bullish order block. So after we form this bullish candle here, I would start trailing my stop under the next bullish candle wick lows. So we have this level here, we have this level here, then we have this level here. Once again, we start a retracement structure here. So if you trailed your stop right under that one, you would have been taken out. But once again, before price started this retracement, you would have caught majority of that move. Now, depending on your knowledge, etc., you can actually simply use what I call a manual trailing stop, which is where you're doing it mentally versus hard. So that's a little bit about it. It's a little bit more to it, but it takes, time to, break it down.
Cool. Awesome. Brilliant. All right, folks, that is probably one of the best chart breakdowns I've seen on the channel here in a long, long time. So Vaughn, Ray, so thank you very much for that.
No problem.
Now, to wrap things up, what's the best way for the traders to get hold of you?
Awesome. You can reach me on Instagram at Ray Vaughn FX. You can find me on YouTube at Technical Gods. We have over 120 videos of training material from everything from, order blocks to how to train yourself on psychology, etc. We also have a live trading room. You can find the website at tgfx-academy.com.
Brilliant, guys. Look, Ray, thank you once again. If you do want to check out a little bit more from Ray, in fact, it's a lot. It's the really good podcast. Go and check it out. There's a link under the video here. Whilst you're down there, hit subscribe, hit like, click on that notifications bell, click all, and we'll see you in the next video.
Awesome. Take care, traders.